Now, mortgage rates in Europe are actually falling, despite the ECB saying it's not ready to discuss cutting the policy rate. Knight Frank says the rate on a typical 5-year fixed rate loan is slightly under 4%. Variable rate mortgages are running a little over 5. Knight Frank says they'll likely go lower after today's decision. Mortgage rates remain higher than Europeans are used to, quite considerably so. And Knight Frank warns people who get variable loans are still taking a risk. William Beardmore-Gray is a senior partner and group chair at Knight Frank Real Estate Group. He is with me now from Winchester in England. Good to see you, sir. Look, a good example, classic example. I have a US mortgage taken out 20 odd years ago. It's about 3% or something. I have a UK mortgage taken out roughly the same time. That's now back over 7% because of it. I mean, the need for rates to come down to stimulate the housing market, would you agree?
Well, look, as you said in the opening there, Richard, the fact is that what we now have is some certainty, and that is the fact that people are now looking for rates to come down rather than go up again will give people the confidence next year to get back in the market. As you said at the start, a 5-year fixed mortgage is just now below 4.5%, and that expectation that we are over the worst is definitely being felt by buyers and sellers.
How far have you seen the higher rates hit the market, would you say?
They've definitely had an effect, and anybody who's had to refinance a mortgage over the last 12 to 18 months has been feeling the pain. But what I would say is that, people are pretty well capitalized, employment rates are high, and what we saw last year was a dramatic reduction in the volume of transactions across the market. We saw about 25% less transactions last year.
Right. If you now look ahead, and I was talking earlier to the Nobel economics winner, Paul Romer, about where rates are likely to end up, because the ECB is likely to be the first, the BOE probably second or third after the Fed. Where do you think rates will end up? We're not going back to zero, that much we know.
No, well, look, I mean, the long run rate in the UK, for example, is around 3.5%. And, we've had, we've got used to, probably a false economy, which is free money. So, if it were to end up back at the long run average, that wouldn't be a surprise.
Maybe not to you and I of a certain age. I think some of the younger people might have a bit of a shock. Finally, what properties sell best? I mean, obviously those that are in good nick, but are people looking for flats, for houses? I've always wanted a stately home. Do you think you can find me a cheap one?
Yeah, you and me both, Richard. I mean, look, to be honest, across the world at the moment, there is a shortage of living accommodation, whether that's for students, whether it's for the likes of you and I, whether it's for healthcare or care beds, etc. So any property at the moment which is sensibly priced is selling well.
I'm good. Glad to see you, sir. Thank you very much for joining me. I appreciate it.